Utah. Today I wanted to ask some really important questions. How much do you have in accounts payable? How much do you have in accounts receivable? Exactly how much do you owe on loans, and what are the interest charges that you're paying for those business loans? How many credit cards are you using exclusively for business? What's the interest rate on those? How much are you paying every month in interest? What is your average sale month over month? Average sales numbers. Do you know how much of those are for sales of product if you sell product? Do you know how much of them are for sales of services? Oh wait, you don't know? Most of my clients don't, and it's a little bit frustrating for me personally, because these are the things that you need to know to grow your business. These are the things that are just vital for you to know in order to make intelligent, thoughtful choices about what direction you want to take your business. For example, my number one sales is not in regular weekly bookkeeping. It's in catch-up work. That tells me that my clients, the people that come to me for help, are months, often years, sometimes decades behind in their paperwork. They have no idea what they're doing. A lot of times they're making money in spite of it, in spite of themselves, because they just don't give up. They really don't know what they're spending. They don't know what they owe. Some of them have been upside down in their businesses where they actually owe more than the business is worth. The business owes more than it's worth. Their equity is negative. They're in negative equity. So how do you know? Well, there's two forms that I want my clients to look at. There's 3 that I send them every week. There's 2 that I really want them to look at. The first one is the profit and loss. This is your scorecard, part 1. This tells you, are you winning or losing? That's what it tells you. And I keep kind of harping and hemming and hawing on read your reports. Please read your reports. Please read your reports. The first thing you want to know is, are you spending more money than you're taking in? If you are spending more money than you're taking in, then you need to do 1 or 2 things, or both of them. One is you may need to reduce expenditures. Maybe you decide not to refurbish your office. Maybe you look at your meals and entertainment and see if it's really important to wine and dine your clients, or are you spending a lot of money eating out when you could be eating in? If you are struggling in your business financially, that's one of the very first things I try to get my clients to reduce is meals and entertainment, unless they travel for their business. If they are in town, they don't need to be eating in restaurants. And I know it's easy, and I know it's convenient, and I love to eat out just as much as the next person. But when the money's not there, the money's not there. How much are you spending on the latte factor? Remember, the latte factor is the idea of going and you spend $5 a day. $5 a day. It's not that much. It's just $5 a day, every day for 30 days. Which is, what, $150? Is it more than that? It's $150 a month. Do you need to spend that $150? I mean, when you think about it in a big lump sum like that, it becomes a lot of money. Are you spending more than that? Are there expenditures that you maybe need to hold off? And the other thing that needs to be done is to increase revenues. If you have carved your expenses down to the bone, or if you don't want to, or if you want to kind of hit it from both angles. The number one thing I really want to see my clients do is increase their revenues. I don't necessarily want to see them reducing expenses unless they are not being wise with their money decisions. And I can usually tell this by doing their books. But I want to see revenues going up. I want to see unnecessary business expenses going down. And by this I don't mean freak out if your staff decides to print on 1 side of the paper instead of 2. That's not what I mean. I mean, maybe you don't go out and buy a $1,000 laser printer today. Maybe you don't put that on a credit card. And a business finance, as far as I'm concerned, is much like personal finance, with an exception. Well, maybe it's not even an exception. Just like in personal life, sometimes we need to take out a loan to get ourselves started. We call it student loans, or maybe a mortgage. In a business, if you have a business that requires a lot of overhead and you yourself do not have a lot of money, you may need to take out a loan to get your business started. So on the balance sheet, I'm coming back to this. On the balance sheet, you have how much you made and how much you spent. We want the number at the bottom to be positive, and we want it to stay positive all year long. On the balance sheet, however, we have the money you owe, your liabilities. Well, at the very top, we have your assets, the money you have, things that you own that are worth money. Money in the bank, the balance on your bank account is an asset. Vehicles, furniture, buildings, land, anything, computers, office, printers, and then various other assets that are going to depend on the business. Lifts if you work on cars. Tools, big tools. I don't mean, a $20 wrench. I mean a $500 compressor. Things that cost a lot of money and have a long life to them. Those are your assets. Some of them are liquid assets. That means that you can get to that money quickly. That's your bank accounts. Some of them are not liquid assets. That means you would have to sell them or use them as collateral on a loan in order to get the money out of them. That would be buildings, land, vehicles, miscellaneous other assets. It's important for you to know how much your assets are worth. And by how much they are worth, I mean, as an accountant, I want to see what your purchase price was, and then I can depreciate it over time. For example, if you buy a $500 computer, the first thing I'm going to do is I'm going to put it down as being valued at $500. Over the course of the 5 years that computer has a useful life, computers really do only have a 5-year useful life. I've tried to extend that life many times and ended up with a chunk of junk that's probably still in my house somewhere. I have a dead laptop that I just, by the time it died and I got the desktop that I'm working from today, I was just excited to get rid of the laptop. But anyway, computers have a 5-year useful life. You may be able to use them beyond that, but for accounting purposes, we count them as 5 years old. And I'm going to depreciate that item over 5 years. So if it's a $500 computer, I'm going to depreciate it by $100 every year. So at the beginning, of course, it's worth more, and by the end of its useful life, it's worth 0. But it's spread out over 5 years. Okay, and that's called depreciation expense. That's why you are not going to see expenses. It's important to know these terms. I know they're kind of boring, but that's why you don't see expenses on your balance sheet. You don't see major purchases listed as expenses on the profit and loss, because that needs to be spread out over time. So when we look at your assets, we look at what did you actually buy it for, not what the market will bear today. This is really important, especially in real estate. It doesn't matter what the market will bear, it matters what did you buy it for. And then, so we have all of your assets listed, and then we have all of your liabilities. This is why I ask for every single credit card, every single loan statement, everything that comes in that pertains to your business. I want to see it. It's not that I want to be nosy. I don't care. But I do want to make sure that your business is healthy. That's what I care about. And I cannot tell that if you have 25 checking accounts and you're only telling me about 2. Or if you have 10 loans and you're only telling me about 1. that doesn't give me or you, it's not fair to you as the client, it doesn't give me a clear picture of what your business is doing. Now, in the next couple of weeks, I'm going to start counseling and coaching on how, what these reports mean for your specific business. I'm going to be available for that. I'm not quite sure what I'm going to charge for that. My existing clients, I do this as just part of their package, but for new clients, I'm not quite sure what the new charges are going to be. Because I want to sit down with my clients at least once a quarter and let's go over all of this and explain to you. Let me explain to you. I have talked to clients that had a cash flow problem. A cash flow problem. That does not mean that their business was not profitable. It means that they had problems with money coming in and needing to go out to a liability. When I looked at their profit and loss and their balance sheet, I could tell that it was a profitable business. But because there wasn't a lot of money in the bank, a lot of their assets were hung up in non-liquid forms. Excuse me, they needed expensive tools and equipment to do their job, to do their work. And so they were making payments on these loans, but as far as their profit and loss, they were certainly bringing in more money than they were spending in expenses. What was kind of eating them alive was their loans. And so we talked about different ways of approaching that. And I really did point out to them, I said, you have some loans that either need to be refinanced over a longer term, or we need to find a way to pay these off quickly, because it's not that your business isn't profitable. It is profitable. It's beautifully profitable. It's one of the best run businesses I've seen. It is that it is a cash flow problem. That's not the same thing as lack of profitability. So as you look at your balance sheet, and you have to look at it with the profit and loss, these are your scorecards. Your profit and loss says, hey, look, you spent less than you earned this month, but it does not include loans. So credit cards, SBA loans, lines of credit, HELOCs that maybe you took out on your home to finance the business, startup costs, or not startup costs, but a startup loan. I already said credit cards. Anything like that, that shows up on the balance sheet. So you may be wondering, well, how do I even figure out how to explain this? Well, on the balance sheet, at the bottom of your balance sheet, for the end of the period, it will have your profit or loss. Hopefully it's a profit. It should be a positive number. When you look over on the balance sheet, that number is going to come over as retained earnings. And so that's going to show up in your equity section. You want to make sure that number is positive. If you have a lot of assets and you have few liabilities and your profit and loss statement, your income statement actually shows income, you're golden. Your profit margins may be small. And I think it's important to understand that. The client that I was talking to that was so concerned about the profitability of his business, he had fairly low profit margins, but he did have a profit margin. And kind of keep in mind, the big oil companies, a lot of these great big companies that are so wealthy have like a 2% profit margin. It's teeny tiny. But they keep their expenses low as they can. They make wise investments. And over time, that 2% adds up. Now, what do you do if your business is upside down? What do you do if your profit and loss statement shows a loss? Well, you talk to your bookkeeper. You talk to me. I hope you would talk to me. And then let's figure out why it's showing a loss. Have your expenses stayed the same, but your revenues have dropped? Maybe the solution, as counterintuitive as it may seem, is to spend more money, but in the right places. If your revenues are dropping, then we want to look at why. If your sales are dropping, is it due to the market? Is it something that's completely out of our control? I really very seldom believe that that's the case. Although it could be. It could be, you know, if Apple Computer decided to go out of business tomorrow, all of these people that work on Apple computers would have a big boom for a while, and then their business would die because it's based on Apple. And then they would have to either change their business model or they would have to go out of business. Is it something that you can control? If you don't know exactly why your business has slowed down, then maybe the answer is to spend money on advertising. A lot of times it's the first thing that businesses cut out, and that's a real shame because that is where you are finding, your clients are finding you, your customers are finding you through advertising. It doesn't have to be a lot of money. Advertising can be very effective on a shoestring. In fact, it can often be more effective on a shoestring. You don't need a big billboard on I-15. You just need a way of letting people know that you're there and you provide some sort of valuable service or sell some sort of valuable product. If you sell product, you're going to have cost of goods sold, and that does show up on the profit and loss. Are your cost of goods sold getting high? Is your payroll number getting high? And when I talk about it being high, I mean in proportion to your revenues. If you have a larger business and you, well, let's say it's something that's very labor intensive. Let's say it's bookkeeping. You pay your bookkeepers a certain amount of money and you expect a certain amount of revenue coming in. If your revenue drops, your payroll should then drop in proportion to that. So you could be way up here, or you could be way down here, still be profitable, but this should be pretty proportionate to the other. If your revenues drop, but your payroll goes up, then we need to have a look at that. If you don't know what your business is doing, you're not going to know how to solve any challenges that come up. And that is really important to know. If, you know, I like to talk to my clients fairly in depth about once a quarter. They get their reports every week, and I usually start off explaining these reports to them because, yeah, they can seem a little esoteric. I don't get what there's, you know, I've had so many clients, some of them very wealthy and some of them very, very successful. And they say, I don't even look at your reports. I have no idea what they mean. And I think, you could be even more successful if you knew what was going on, if you had the hard numbers. You could interest angel investors. You could change a lot of things in your business if you actually know what's going on. Now, if you don't, I can't force anyone to understand their businesses, but it's really in your best interest. You don't have to do the grunt work of sitting down and entering all of the data. I can do that for you. But you do have got to open up the reports and read them. Ask for clarification. Harass me about it. And figure out what your business is doing. You get, if you're a client of mine, you get your reports every Monday at 10 o'clock, period, full stop, end of story. So you can look at that and you can see what these changes are week over week. And if you're not sure, I can produce some graphs and charts and pie charts. I can show you what your business is doing the year before, you know, year over year. I can show you what it's doing month over month. I can show you just about anything that you want to know in relation to your business if it makes sense to you. And I want it to make sense to you. I don't want to start sending a bunch of reports that don't make much sense. So here's my question. Do you know how your business is doing? If you don't know how your business is doing, please comment below or direct message me, and let's find out how your business is really doing and how I can help you figure out how to do better. which probably, I don't think that came out quite the way I meant for it to, but it's not to figure out how to do better, it is to figure out how to improve the financial picture of your business so that you can be making more money. Sometimes it's kind of counterintuitive, sometimes you need to spend more to make more, but that's okay. That's it for today, and I will talk to you again tomorrow. Have a wonderful day.